All right. Hey, good morning. Um, Welcome. I appreciate you guys taking the time to dial in live. I know lots is happening in the field. I know the weather's good, and I know we got to be out and about um, and doing everything we can. So I'm going to try to keep everyone muted in the background so that our recording's clean, because I do expect lots of people to watch this over throughout the day. Okay, let me jump to the conclusion. Again, fundamentally, um, nothing's changed. We just don't have the supply available to us to warrant selling this market. And you can break down any growing region in the world that you want to go look at. We'll get to us here in a second, but you can look at South America. It is drier, not better. You can look at India. It's getting worse. You can look at Europe. It's getting hotter and drier. You can look at the Black Sea region, and it is problematic at best. There's just simply nothing out there that says, "Hey, better supply is coming and it's immediate." Then we start to look at what's happening on our own in our own market, and it's honestly shocking, right? And it's been building for a long time. So you go back to last year, and you start to absorb the data from the drought on all the specialty crops and spring wheat and the issues that we had in the north, and you start to recognize that, oh my goodness, we actually have huge issues in all of those markets. And so this thought that corn is going to buy acreage really just doesn't work, because in order to buy acreage, it's got to be able to be planted. And when you look at the north, it's not getting in the ground. The prevent plant payment is very attractive, and so guys are starting to swing that way, because you've got all these other specialty crops that are vying for acreage. So out of the north, there's a very real possibility that corn acres decrease significantly from the USDA's 89.5, and those acres don't just automatically go to soybeans, because there's other crops that are vying for acreage as well. Now in the south, you've got issues coming to light down there as well, which is the fact that corn may have lost acreage to cotton or to rice. Bottom line, there is huge demand and huge pressure on every acre to get put to its highest and best use. And right now, corn just hasn't done enough to warrant everyone planting it. So we could legitimately come into to the June 30 crop report and find out that corn acres actually decreased significantly from the March planting intentions reports. And I think that would just be a huge catalyst. The idea that corn acres increase, I think, is waning by the day. Now let's talk about yield for a second. Everyone's going to be penciling in huge yields. They're just going to assume that we get all of our crop planted and that every acre goes into the ground and that we don't have any yield issues at all. And it's definitely too early to say, hey, no, we have weather issues. We're going to have we're going to have a crop failure. That's certainly not the case. But to think that we're going to beat our all-time best yield by 4 bushel an acre when we're planting into huge droughts and huge sets of issues, I just don't understand why people think that those yields are gonna increase above the all-time record. Maybe they tie it, and if we tie the all-time record, we have a huge balance sheet problem. So the point is this: I don't know when it's going to happen, but not a single problem gets solved in the corn market with lower prices. In fact, lower prices create many more issues than higher prices. Higher prices actually solve our problems because we help ration demand. And we've been saying this for weeks and weeks and weeks, and I know it's a broken record, but until we solve that problem, corn's got to keep working higher. So even with this sell-off that we've had over the last couple of weeks, right? 825 down to about 770, so about 50 cents. If we've sold off 50 cents, and we've just come into the 38.2% retracement line, and we've solved no problems, what's the most likely next move? Well, it's got to be higher, right? Because we can't run the risk that we take this thing so cheap that China comes in and just buys us and puts us into a below pipeline situation. Price can't let that happen, so it's got to stay higher. Another thing that I think we got to think about is what's the most difficult price point to trade from with a crop report coming up tomorrow. So we're sitting at the 38.2%. That's not an easy spot because you can sell it and make it cheaper, or you can buy it and reverse it, right? So this is kind of the bottom of the sweet zone for the most difficult spot to trade. The top of that zone is right up in here to the middle of this range. So somewhere between here, this level here at 770 and this level up here at 880, at $8, somewhere in here, I think is where this market's going to trade to and through tomorrow, because that makes it a true 50-50 ball. Nobody will have any idea what to do with it in that situation. And so you have to just go back and really rely on the fundamentals and say, what has changed that would warrant this thing to fall across, to fall out of bed? And you got to look back at history and realize that in 12, 8, 96, every single year that we have crashed this market and taken it lower, it's always coincided with a favorable pollination event. It has never coincided with, hey, we think we just are going to plant a crop, and we think acreage is there, and we think the yield is good, and we want to, and we're not slowing down demand, so we got to kill this crop. That's never been the case. In 12, once we tried to ration, and then once we pollinated, boom, we dropped like a rock, right? So in this situation, where are we? We've solved no problems. We have uncertain acreage, we have uncertain yield, we have supply shrinking, not getting bigger anywhere in the world, and we have demand racing off the charts. So I don't think that you can sell corn here, even though we've traded down to the 38.2% retracement level. Now, let's talk about this level right here and what this setup really looks like. So we've taken our force index to below the zero line. We've taken our MACD down to an oversold level. We've reversed right at the 38.2% retracement level. We're holding the fast and slow lines, and we're bouncing off, and we're holding above where we were 26 days ago. Everything about this is an extremely powerful risk-reward situation, just like it was last week. It's actually made it even better because anywhere in this zone is a buy signal from here to 740 with an upside potential of we don't know where, because realistically we should be working higher. Now let's look at the weekly chart, okay? Now this is your continuation weekly chart. This isn't just July, but look at what we're doing here. There's nothing weak on this chart whatsoever. In fact, we may be working a little hook reversal, and we get some sort of a bullish catalyst out of that report tomorrow. You could have a bullish engulfing week and catapult this thing in the new all-time highs. Remember, 819 is the all-time high weekly close. We missed it this week right here by less than a point. 818 and a quarter, 819 and 3/4 is the all-time high close. So we've missed it. We've retraced just a little bit, and now the next probable move should be higher, up into new highs. So, and we have no idea just how high it will go. All right, let's talk about soybeans for a minute. Because everyone out there says, oh, beans, too many acres. We have a 300 and some million bushel balance sheet. We have all of these bearish catalysts that are warranting much lower prices. But yet here we are sitting at $16. And yeah, I know we're off from 17, but here's the deal. The same weather issues that are plaguing corn are also plaguing soybeans. So in the years where we've planted late or we've gotten into issues, our soybean yield hasn't been outstanding, and it doesn't take a whole lot of yield decrease to significantly reduce our balance sheet. So the idea that we're going to have a record crop also applies to beans. Now it's way too early to start trimming it, but you start to look at crush margins, and even at this current level, they're still dollars per bushel. So everyone's going to keep grinding them. They're going to keep purchasing them. A lot of people talk that China is somewhere between 8 and 15 million metric tons too low on their purchases, and they've got to come here in order to get them. And so the odds favor soybeans being bought by China in the near future as well. So lower prices on beans don't necessarily spell problem solving there either. What does this technical setup look like? Well, it's pretty bearish when you just stop and think, man, we dropped a long way. But also look what we've done. We've held where we need to hold, right? We're trading inside our cloud. We're trading right down into nice chart support, and we're trading. And we've just barely started to get into an area where we could break below where we were 26 days ago. This is the line right here. So if you reverse from here and move on higher, that's fine. There's no issues there. Now let's talk about wave counts. From a wave standpoint, the next move is a B, and that move takes us higher, probably up into this 1675 to 1690 range, which would be a 61.8% retracement of the move down. And at that point, you got to make some decisions. Will that happen before Friday? No. Or before tomorrow? No, it won't. Will it happen next week? I don't know, probably. But I think the next most likely move is up, because let's be realistic. If it's a no-brainer to buy corn 20 or 30 cents cheaper, it's a no-brainer to buy soybeans going into the report with this much structural support. Now, if we collapse it and break down today and we start taking out 1543 or whatever, then maybe we're missing something. But I don't see anything out there right now that would suggest that that's going to be the case. All right, now let's talk about wheat. You got to look for something in these markets when everything else is uncertain. You got to look for something that might lead the way. And when you look at wheat, I think it looks really, really good. And I want to spend a few minutes here digging a little bit deeper and into the shorter term timeframes here on wheat, because as wheat goes, likely corn goes too. Remember, they're cousins, right? So if wheat explodes higher, that's going to pull corn up with it. If wheat implodes, it could put some pressure on corn too. So let's look at really what it says, really what it's telling us, okay? So here's your peak in March. You've got a decline into A, which held, didn't do any chart damage whatsoever. It just ran some stops, got some nervous people out. And now we've rallied it right back up into this point here. So the question is, what does this move look like from the A up to the B and subsequent? Is it unfolding in an impulsive manner? Is it unfolding in a bearish manner? Which is it? What clues can we glean from it, right? Because you're going to have people say, oh, you've got a double top, maybe even a triple top. You've got some issues looking at it. So I want to come down into a 240-minute chart, and I really want you to look at this April 18th through May 3rd low, okay? I want you to see it. You got 1, you got 2, you got 3. You got a decline, a rally, and a decline, okay? Now, as we get into the 240-minute chart, it's going to change the perspective just a little bit. But here's the peak on April 18th, and here's the decline. Here's your A, here's your B, and here's your C that's going to terminate right down into here. Now, look at the move from here up on the 4-hour chart. It's very impulsive. It's very little overlap. See how much overlap we had over here in this A to B congestion zone? And then even into the C, it was very choppy and sloppy. This is pretty much just straight up. There's very few pullbacks and retracements. Now, we had the retracement the other day, but it's just falling down into a 2, and now it looks like it's going to thrust on up higher and take these highs out. So now let me pull back out to a daily chart, okay? So if you keep this in mind, this is ABC and a 1-2. The bigger picture is you've got an impulsive move up for 1, you've got an overlapping and corrective move down for 2, and now you've got an additional 1-2. That's an extremely bullish count on your short-term charts, and it's going to take something like that to thrust up to a bigger picture. Now let's take this a step back and look at the weekly chart of Kansas City wheat, okay? Nothing weak about this at all. Even after the sell-off, the moves lower have been corrective and sloppy, and the moves higher have been straight up. So this is that low. Here's the 1, here's the 2, and up and away we go. I think wheat's about to explode higher. Let's look at the monthly chart on wheat, okay? Here's the monthly chart. This goes back to the all-time peak right here at 1386 back in February. Here's where we are. We've spent already more time above $10 in this move than we did during the entirety of the last one. So if you get down into it, we had one monthly close, we had a couple of weekly closes, and we had very few daily closes up in this range. We've already exceeded that, and so what that tells us is that this move is just starting. This is extremely impulsive. You can't count 5 waves up in it. You got to have more thrust to the upside in order to get this thing to slow down. So I think wheat is going to lead. I think it's going to be very, very powerful. And what's driving that? Well, you got 2 big things, right? You got weather and you got war. And Putin just seems to be digging his heels in. We're not going to resolve that thing anytime soon. You got our crop, which is a disaster, and you've got every other crop that's currently being grown in bad shape. So wheat's fundamentals are bullish. Its chart is bullish. That's going to put pressure on corn, which is too tight. And that's going to put pressure on beans, which are a little bit looser, but they can't withstand everything else rocketing higher as well. They've got to go higher too. So nothing about our analysis says, hey, we're done. I think we got to just keep looking the other way, keep our heads down, get our crops planted. Don't worry about prices yet, because we got higher to go. We can't solve any problems with a lower trade. All right, I know it's a broken record, and I know that everyone is antsy and wants to sell this thing, but I think the market's been very, very orderly and is getting ready for a melt up, and we don't want to get caught on the wrong side of that. So it's prudent to leave some risk in order to be ready and prepared for that melt up if and when it actually does happen. All right, remember, trading futures and options contains significant risk, and you should only trade in light of your own financial condition. I hope you guys have a great week. If you have questions, please call us. We'd love to talk through it with you, and we'd love to help you think through whatever situation is that's got you worried a little bit. We'll talk to you next week.